Turning back to IPOs, with about half of this year's debuts falling below their original offer price, the question the street's asking is if the IPO party is over. Joining us today at Post 9 with his take, venture capitalist, noted tech investor Bradley Tusk. It's always good to get your opinion on things. Welcome back. Are you concerned about the action this week?
Yeah, I mean, yeah, absolutely.
Need a word?
For sure. And I think I've been thinking about this a lot, as I assume every venture capitalist has. There's a fundamental misalignment between the private markets and the public markets. And I think in trying to figure out why this has happened, so much money has been raised by growth equity funds, private equity funds doing venture, VC funds, that SoftBank, $100 billion are doing it again, that they've got to deploy it, right? And they've got to justify the 2% management fee and everything else. And as a result, they put more and more money to work at higher and higher valuations. It meets the needs of the companies doing the rounds, but then once it hits the actual market, it's available to retail investors, they're looking at this and saying, there's no way WeWork's a $47 billion company. Uber's not a $72 billion company. And there's just a mispricing. Is there a price for WeWork that's the right price? Absolutely. It might be $4 billion or $5 billion. Is there a price for Uber that's the right price? Absolutely. Maybe it's $30 billion, not $70 billion. But until the two things become aligned, it's going to keep happening.
Well, it's hard to imagine that public valuations are going to catch up to the upside. So I assume you think private valuations
are going to have to go down, for sure. I mean, I'll tell you right now, and we invest in seed and A, it's a scary time because you know at some moment the valuations are going to fall off. Right now, they're still really, really high. You don't want to overpay and then all of a sudden hit a recession in 12 months and everything's, the alignment happens on top of you. You also want to miss out on deals. But I think the other problem is this. Part of it is things being priced too high. The other is, I think we as venture capitalists are not doing enough to put the right kind of controls and governance on some of these startups. So
is that secondary, or is that a big deal?
I think it's secondary, but I think part of the reason, if you look at WeWork's implosion, part of it was just value too high, right? But part of it is Adam Neumann's behavior just freaked everyone out, right? And rightfully so. And you saw this at Uber with Travis Kalanick and at Tesla with Elon Musk. And I think in some ways, you can't not invest in the slightly crazy genius because they're the ones that tend to do these great things. You can't just say, okay, the IPO will switch them out because that hasn't worked for Uber at all, right? People don't believe that the company really can innovate. So I think what it comes down to is, even at the expense and risk of potentially losing a deal, you know, we tech investors at seed, A, B, C have to say, no, you can't have total control over the board and all do stock classes and everything else, and just do a better job managing them.
But is there something also in the way these companies are being run when they're swimming in all of this capital from investors? I mean, you look at the way WeWork was growing. They're talking about scaling that back now. The way some of these companies are spending on marketing. It's really hard when you read the S1 sometimes to understand how the business model really works, how much of that top line growth is being driven by marketing and how much is because they've got a great product with a moat.
Absolutely. Look, I mean, we always look at when we're trying to figure out, because we're coming in, say, 5-6 rounds before something goes public, we see how there could be an immediate boost in the valuation through a lot. You buy a lot of Facebook ads, you could probably sell some product, but does that sustain itself through multiple rounds? Look, there's spending on marketing. It's also just bad spending. We spent $60 million on a private jet for Adam Neumann and his team. That's crazy. Like a few months ago, Uber announced they were canceling their policy of having helium balloons for people's birthdays because it costs the company a couple $100,000 a year. Helium balloons for a couple $100,000? Like, what world do we live in?
Here's the broader concern among many, and that is, in 10 years, you're going to want to have created Google's, Amazon's, Microsoft's of tomorrow. So if it's not Uber Lyfts, right, and if it's not WeWorks, and if it's not any of the other things that have not done well this year, right, Bitcoin or whatever, what's it going to be?
You know, look, we all kind of name the same companies, right? You know, Amazon and Google, and Microsoft and Apple, those are 4 companies. Are there 4 companies in the whole world of startups that will likely be that? Yes, but I think we're so eager to anoint whoever it is that we accept this notion of as long as they keep growing, they'll figure the rest out. They'll become profitable at some point. And one of the things that we've learned is if an entrepreneur, if a founder can't say to us, here's how we become profitable in X amount of time, like just trusting them that they'll figure it out is not a good business strategy.
If you're Airbnb, if you're Brian Chesky, right, you've already planted the flag, said 2020, that's my year, we're going public, and you see what's happened, certainly over the last couple of weeks, but throughout this year, what do you have to do when you're crafting your S1, when you're thinking about your terms, when you're thinking about your governance to have the best debut possible?
So I think in this case, Airbnb actually has a couple advantages. Their governance has usually been pretty good. Chesky is seen as a sober and reasonable CEO. And also, for them to be a successful company, they don't have to become the Amazon of whatever, right? They just have to basically do what they're doing at a bigger scale and execute on it. So I think of all the big kind of tech unicorns and decacorns out there, they may be the best position. But still, I think he has to really show and tone both his own words and the S1 that they get why the markets have been skeptical of these other companies. Here's where they're different. And look, also the answer may be they come in at a lower price than they expected. One thing we're seeing, the tech stocks that are doing well on IPO are the ones that have been a company for 3-4 years. It's a couple of $1 billion valuation, and there's still people believing the upside and the story. If you've been private for 10, 12 years and you're worth tens of billions of dollars, there is no honeymoon by the time you go public.
I don't want to surprise you too much, but there's a headline now on the tape. White House weighing limits on U.S. portfolio flows into China. With that, we've lost not only a triple-digit gain on the Dow, but S&P's gone in the red as well. There goes your trade optimism for the day.
For sure.
Right? Do you sense
I sense
negotiation becoming more extreme?
I think the negotiation is always reflective also, though, of where other things are going on in the White House. Now you have impeachment, and the president's going to want to sort of sometimes have another narrative going.
But the thinking was that he would become more dovish and more
you would think
attuned
so.
to a
and you would think that if you assume impeachment, it's going to hurt him in some level. If he wins re-election, it's because the economy is really strong, which means you would try to resolve things with China. But either A, I think he tends to live for that immediate headline, whatever it is, and it doesn't necessarily matter what the implications will be 6 months or 6 years. It's how do I get the guys on Squawk Alley talking about me about something other than what I don't want to talk about.
Well, this will do that.
Yeah, certainly
this will do that. Limiting U.S. portfolio flows into China, which have been called for by the likes of Steve Bannon, for example.
No, if you're a hawk on China, that's what you want. But everyone in this building we're sitting in right now, and I feel like everyone I know really has a hard time wrapping their heads around this.